welcome to my February 23 trade review. This is likely the first video that I've ever put out public. I'm only doing so for my own benefit, but I'll get into that at a future point in time. February 23 was likely the worst month I've ever felt personally in terms of my performance and reviewing. Negative $735, but to be honest, it's more the reflection on how I traded with lack of discipline, lack of consistency, blatantly ignoring my rules, which I'll get into, and which probably, it gave me like this is what is it's not the result. It's definitely the way I traded, and probably I'm the person who will feel that and understand that the most. I traded 29 times over the month, which is almost double January 16. For those who are just following, 16 is a good, January was a good result for me, and probably something I will keep modeling my months off and comparing to. So the big kicker in this was my lack of discipline, and that filtered through in the unspecified trades down here. I took 15. In January, I took 3. It was very, very poor. Here's my P&L, and I'll get more into how that curve eventuated. So just quickly reflecting on the month, like I said, probably the most embarrassing month I've ever put up. I was moving house at the beginning of the month, which probably until the mid-month, and it was more than just moving down the road. I was moving about an hour and a half away from my job now, getting used to. So there was, at the start of the month, the whole moving out, no fridge, for a couple of weeks there, doing the clean, everything like that, and then moving to this new place, getting used to the routine of travel. And I can say now that I'm coming into March, I'm just sort of getting into that. So, that's a positive, but I was able to identify this from week 1 or week 2 in February, that this was going to be a bad month, no routine. I should size down, stop trading, whatever it may be, do something. And I've managed to do the complete opposite, and that was just purely a lack of discipline. And this is what really gets to me. I was aware that I was taking unspecified trades. I was aware that I was sizing them improperly, aware of all of this, and yet I continued on. And I was sizing non-playable trades here way too big, way too big. Which is just like, this is just the stuff, the basics that I'm still trying to get right, and I'm still wanting to work on the most to get right, just having that discipline and that time. I will start with what I did well, because it is so limited. The one thing I did do right was I was able to identify the direction of the market. So for context, my breakout strategy only really works when market's going up, market's going up, market's going up. Doesn't work when you're moving sideways, doesn't work when you're moving downwards. It blatantly just does not work. So through January, had a really good month. Market went up. I knew there was going to be a pullback. I didn't know whether it was going to be, to this previous level, whether it was going to be a full pullback over the month. Wasn't aware there's going to be this amazing symmetrical downward channel, downward trend, but I knew that it was going backwards. So what I did was I flipped my long thesis or breakout thesis on its head and went for the breakdown, which is something new, and I probably should have put more effort into learning this before executing. But a part of it is just being able to actually make educated decisions. So usually large move higher, you consolidate, volume drops off, continue to the upside. Not the case this month. I was aware that market was turning, so I sort of chopped myself up a little bit here, thinking, oh, we're going to be long, oh, we're going to be short. Eventually caught this breakdown, which is great. Caught this breakdown, but then I broke another one of my amazing golden rules, which is not trading into earnings like this, because of this result exactly. It was great earnings, but sold into people making a lot of cash, dividends, XYZ. And probably the peak of me being unstructured in my trading was around here because I was taking non-playbook trades, because I was sizing inappropriately, because I was very, very sloppy in my whole execution and I didn't spend a lot of time in the market. I I mean the peak of that was here I was trying to cover into strength, so I would be buying back my position to cover it. I ended up doubling down and went twice as long short into strength, was able to cover at the top, and of course gave back the healthy profit that I secured a clip down here. So gave that all back in a little bit. Um, and I mean, just things like that. It was because I was out of the zone. I hadn't taken the time to do my report cards. I hadn't taken the time to spend time on the weekends doing the reviews of setups that could be coming. I wasn't aware of sort of the market. I was very out of the market, and thing like the book Trading in the Zone, which was really good at being able to get through to me that, hey, you've got to be in there every day, understanding what's going on so you can, feel like you're in the groove with the market. Totally not the case in February. So, and I mean, this is the equity curve, and purely because down here I was just sizing largely. I realized the spot that I was in. I was totally aware of what I was doing, so I thought, oh, I'll dig myself out of this hole by trading way too big a size for non-playbook trades. And it went just as badly as what you would think it would. So that was great. Just having a quick look at, before I get on to what I need to improve on, just having a look at last month's goals. This first one was ambitious. Read the playbook and finish that and compile all my notes into Notion. That was, at the time, I was barely at the start of that book. When I realized that I was going to fail all these others, I gave it a good crack, but still was unable to finish the book. Do my weekly reviews to have a learning objectives checklist. So this is last month's goals. Have a learning objectives checklist which provides more direction for my study, because often I'd put in, do 2 hours of study. All well and good, but I had no direction on what I was going to be looking at. So that's something that I've gone ahead and already got in. Here, put learning objectives for the week and a little checklist there that I come back to and reference throughout the week. Maximum of one non-playbook trade over the month, coming off a good February where I was very in control of that. Failed that miserably, 15 of them. Have a pre-setup write-up done before entering any of my positions. Didn't do that a single time. Keep sizing manageable. Well, I just told myself and obviously whoever's watching how that went. So there's a heap of fluff in here about what I need to improve on, because essentially it's every part of my trading. But bringing it back to the fundamentals, a lot of the other stuff will fall in line if I just get these basic things down. And if I can do these basic things right, which I know are good for my trading, the rest will fall into place somewhat. Yes, I will have to pick up some of the other stuff in future months. So I revisited all this fluff, and I put this here. I revisited it, and we just said trading is not an income. And this is particularly pertinent as I move towards trading full time in the next couple of months. Trading is not an income. I shouldn't aim to reach $300, $400, $500 a day, whatever an income is per day. I need to survive, wait for the big setups to come my way, and that's when I back up the truck. So it's going to be short periods of time that I make all my money, so I need to shift my mind frame away from that. So that's something that I'm actively trying to remember day to day and work on. Next is size appropriately. The non-playbook trades were the first element of that, but even on my setups that I actually do have edge in, I was really leaving the sizing based on the setup quality at the door. So I've already gone ahead and readdressed that. So far, I've written down my sizing now for 5-star setup is X amount of dollars or X amount of capital. I've already readdressed that. got my risk profile in check. Now it's going to be actively working on that. And the other thing that was missing was my daily report cards. I essentially hit every four days there, 5 days there, 4 days there. In January, I hit every single day for the report card, and I managed a whole three in February. That's how all my trading was. It was something that was really good because, like this video, I talk to myself. I have time to journal, reflect, and actually think through my trades, where they're at, where they're going to be going. And so that's something that I need to bring back and do more consistently. So that was sort of where I landed, and that's what I'll be taking forwards with me through March. So please, if you have any questions, feel free to ask. More importantly, if you have any feedback, criticisms, I would really, really, really appreciate those. I think that is something that's going to help me move the needle forward, and it's part of the reason, well, it's the main reason why I am moving these unlisted videos on my YouTube to public. It's so I can get broader criticism and broader feedback. So thank you.